Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Doug Politi. He's the President of Compliance Solutions over ADP, and we're going to take a look at holiday 2019 employment trends and exactly how employees need and want to be paid, among a number of other statistics we're going to take a look at. Doug, great to have you with us at Market Site. 650,000 temporary workers are going to be hired for holiday 2019. That's an impressive number.
That's a big number.
What are some of the trends that you're seeing for holiday 2019?
As far as the hiring is concerned, well, it's of course always the big spike, happens every single year, starting earlier in September and October and preparing and getting ready for it, and then kind of lasting as we get into the late January time period. And it's about getting people hired, trained, up to speed, paid very quickly.
And fintech is playing a big role in this in terms of how employees are being paid and trained.
That's right. So what you're seeing is this shift towards more rapid, more electronic, more e-commerce payments capability than paper checks, as an example, particularly in a lot of the retail stores and the seasonal hiring where they need to bring in people quickly. And a lot of it is younger millennial who's used to being either unbanked or underbanked, getting paid digitally on the phone and transacting essentially through their phone as a bank or as cash.
Yeah, and that was my next question to you. Their demands in terms of how they need and want to get paid, they're not getting paychecks anymore. They're either getting like a debit card or it goes through on their phone. Is that how it works?
Yeah, it's a younger, more digital demographic, and they've grown up on their phones, and that's how they think about it. They're really unmoored from traditional brick and mortar banks, and they think differently, and they expect things instantaneous. They expect things to be in real time, and they're looking for digital solutions that bring them into the digital economy. I mean, you think about the way we interact with money, all of us interact with money today, and buying our coffee on the way into Starbucks, pick it up, you don't stop at a cash register, you don't slow down and pay your tolls, you get an Uber driver. All of that requires this virtual account and electronic movement of money, and that's what millennials and the younger generation is looking for.
It could be good for the economy too if you're working in a store on the mall and you get paid that Friday, and once you're done with your shift, you walk into the next store, and boom, you're going shopping.
You can't even get out of the mall and you get money.
Right. It just seems as if this on-demand economy trickles all the way down. Now, when you think about financial wellness, it seems as if especially younger employees are relying on their employers to become partners within their financial wellness. Tell us more about that.
Well, I think the way they look again at getting paid, the money is, their employer is the source of pay, and they can extend that relationship further. But they're also looking at, many of them have jobs in multiple sources, and so how do I essentially get paid from multiple companies, bring it into one location? How do I engage with the money that I have? And incorporated in that is, how do I do things like set up savings accounts or savings envelopes? How do I do things like do online bill payment? How do I do things moving money to other people, like through Venmo or whatever? And again, it's this ability to save, spend, budget accordingly, and they're looking at an extension of pay to be able to provide those capabilities.
Yeah, because it's kind of a concern when you're used to on-demand, point and click. There's that concept that you and I must have had when we were younger and we got paid. We would save our cash in a drawer until we had enough to buy sneakers or clothes or whatever we wanted. It's instantaneous. So there's not that concept of having to save and put stuff away. It just kind of magically appears on demand.
That's right. And a lot of the research that we did with this particular demographic, what we heard a lot in the research was this save me from myself, because they aren't used to having to do that, and that discipline of setting money aside necessarily wasn't there, and a lot of them are looking for solutions to be able to do that. And again, as an extension of pay and how they're thinking about getting paid and spending, it all becomes kind of one linear thing to them.
Yeah, it's really interesting that employees are taking a proactive approach in that. And different topic for another time, but if we had more financial literacy in the school systems, that would certainly help before they have to rely on employers as well.
That's true. Yep.
All right, Doug, thanks so much for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.